Last Friday, Goldman Sachs was charged with a civil complaint involving some very complicated financial matters that are really over my head, and I'm sure kind of over a lot of other people's heads in a lot of ways. So I know that you're really into this stuff, and you explained things to me earlier in a way that made me understand the legal aspect better. So, do you want to start with talking about the whole mortgage crisis and how most people say that nobody even saw it coming, but
Right, like you watch congressional testimony of like Alan Greenspan, the former Fed chair, or Ben Bernanke, the current Fed chair, or even all the bank CEOs when they get up in front of Congress. They say, you know what, we're really sorry, but nobody saw this coming. We couldn't have seen it coming. But we found out last Friday when the SEC filed a civil complaint against Goldman that that's not actually true. Goldman did see this coming. And not only that, they didn't tell their investors. And
not everyone in Goldman, obviously. There's a split amongst even people sitting right next to each other, right?
Right,
Wasn't
exactly.
that what they said in the article? Like, this group was betting against it, this group was betting for it. I mean, so there was knowledge. There was some knowledge in Goldman.
Yeah,
Okay.
you're right. And the thing was, there was such a split in Goldman that they had to take this issue from their little mortgage firms inside Goldman to the top executives. And when the top executives started talking about it, they eventually sided with the people that said the mortgage market was going to go bad.
Okay.
And that's where the
so
problem starts.
They created these debt instruments or risk management instruments whereby their Goldman's clients were betting for the mortgages, and then they arranged for these pools that were the pools consisted of people who had bad credit, right? So how does that work?
So they're called collateralized debt obligations, which is essentially a bunch of mortgages which they pool together and sell to their investors, hoping that when these mortgages come to fruition, they're going to make money. But what Goldman would do was, because these mortgages were so bad, they would buy insurance against them from.
That's the whole credit default swap part? No.
Exactly.
Yeah?
Exactly.
Wow.
Yeah, credit default swap sounds
It's a scary term.
Sounds complicated, but it's
person.
literally just insurance. You say AIG would say
insurance that Goldman would benefit from once they tank.
Exactly. So if you say you have a mortgage, and you gave somebody a mortgage, and you want to make sure that you're not going to lose money on that mortgage, so you go to AIG and say, okay, I'll pay you $15,000 a year to guarantee that this mortgage will, if it defaults, that you will pay the whole thing. And so that's what they did. They would just pay a little percentage. It's just like health insurance or car insurance, whatnot, but it's just insurance for giving out a mortgage. But so anyways.
Makes sense. So then, anyway, so getting to the whole issue and the charges being filed, how does Paulson come into play? This guy who came to Goldman and said, I want you to pull together these mortgages.
Right.
How does
John Paulson, no relation to Hank Paulson, who was actually the former CEO and Treasury Secretary. But side note. So John Paulson comes to Goldman and says, I figured out the mortgage market. You guys are idiots. Like, everything's going to tank, and I want to put all my money against these mortgages.
So at this point, why do they trust this guy? Because when he first came to them, I mean, he was a relatively small hedge fund, right? Didn't it start off with $2 million of his own capital?
Right.
He wasn't really a big fish. So why did Goldman listen to him?
Because they didn't care, essentially. Because this guy was paying Goldman to put together these deals, so they were making money.
Oh, I see. Okay, that makes sense.
And so
it didn't matter if they listened to him or not.
And so Goldman,
$15 million. Didn't he give them $15 million at first?
And plus, Goldman on the other end is insuring these loans anyways. So even if they lose, they're going to make money.
And that brings me to the whole thing that Goldman is saying now. They're saying, look, we lost money on this. We couldn't have been defrauding our investors. What do you think about that argument?
I don't even know how they can claim they lost money, to be honest, because they're getting 100 cents on the dollar for their credit default swaps for insurance from AIG, which they got paid out after the government bailed them out. But so anyways, Paulson, when he, like you were asking before, he came to Goldman and said, I'm going to set up these pools of mortgages, and I want you to sell them to your investors. And then Paulson says, I'm going to go ahead and bet against them. So Goldman...
And he ended up making billions upon billions of dollars.
Yes.
And that's where he made his name.
Right. He came out on top.
Right.
Paulson was the one. I mean, they write books about him. He gets invited in front of Congress. They don't ask him about if he's borderline committing fraud.
Like,
they ask him, how did you know?
Yeah, which is funny.
So the thing that brings this to a criminal aspect is Goldman wasn't telling their investors about their deal with Paulson. In fact, they were claiming that he's an independent analyst.
Right. Sometimes they were saying,
And
sometimes they just left him out altogether, and other times they said he's an independent analyst. So there was whether they completely failed to disclose him
Right.
at all, or whether they just misqualified his status.
Right, and that's the key when we're talking about the criminal thing. If there's intent, if
intent to defraud.
Intent to defraud. So if we just found out today that these top level executives knew.
Yeah, I was just going to ask about that. So how many, like 8 of them are coming forward now? 8 Goldman executives are coming forward and giving not only detailed information, but actual documents that show the structure of these debt instruments.
Yeah,
and things
I think
like
that's
that.
how we know they're in trouble. That the New York Times got 8 people to talk to them.
Yeah.
They weren't on record, obviously, but things do not look good for Goldman. Their stock
Agreed.
dropped 10% the other day. As soon
and
as this
down
found out,
2% more, right?
It's dropping today too.
So anyway, you're going to write a follow-up about this, right? So look forward to that. Thanks for explaining to me, Trevor.
No problem.